The deal, it's finally done. I feel like we've been talking to you since Bloomberg Screen Time last fall when Netflix was like, nope, not interested. It has gone to Paramount Skydance. Is this good? How do you kind of finally see it? It went for a higher price. There's a lot of debt. So do you think this is a good thing for Paramount Skydance? Let's start there.
Yes, I do. I think it's their vision is very interested and very differentiated. They really are going to use the Oracle Cloud, which of course is the father that's really funding this acquisition, very closely. There's a very close technology tie-in. And I really are sort of thinking like broader about how Hollywood transitions into the AI future, which I think is going to be good for, I think this combined entity, they're saying they can close it in the third quarter of this year. So that would be by September 30th would be like record speed. But if they can, I think they would become a leader in Hollywood as opposed to two sort of, subscale competitors.
I mean, how important was this for them? We know that Netflix is the name that everybody knows. It's the world's largest paid streaming service. So just how critical was this in terms of Paramount Skydance's portfolio?
I think it was life and death for P-Sky because it was just too subscale and it was going to be irrelevant. And the competitors to Hollywood these days are really Google, which owns YouTube, and Amazon, which owns Prime Video. And those are the real competitors to Netflix, for example, and Disney. And P-Sky, without buying Warner Brothers, would have been just like a pond to be stepped on. So now with Warner Brothers, it's sort of the same size as Disney together, just with a lot more debt. So they have to solve the debt problem and generate free cash flow. They're saying they're not going to cut people. They're saying $6 billion of synergies, no headcount.
Do you believe that? Do you believe that, Laura? I feel like there's a lot of back and forth about that one.
Yeah. So the answer is they must have hits. They say they're going to go to 30 films, which is a lot of films. And if they have hits through the profits of the hits they make, because that's a lot of films, yes, they will be able to then not cut people. But if some of their films don't hit, or if they spend $100 million on a film and it only makes 20, they have to pay the debt. Because if they don't pay the debt, they bankrupt the entity. So they have to pay the debt first, which says to me, less creativity, less risk taking, more formulaic, more sequels. And the IP, Warner Brothers library is fantastic for IP. So maybe sequels wouldn't be the worst thing, but it will take them about 3 years to return to investment grade, and that is their goal, which I think means less creativity for Hollywood films. But at least we're making films. I think with Netflix, there was a real danger they wouldn't make films as soon as the government didn't force them to make films to get regulatory approval.
And so if they're not able to properly address this debt situation, is this a sinking ship scenario here? I mean, if you think about all of these names in particular, people tend to be a bit more critical about which places and names that they're actually willing to pay subscriptions for. So you talk about the importance here of them actually being able to have some great projects that people are really able to sink their teeth into.
Well, so we have HBO and Discovery Plus, and we have all their assets now combined, and Paramount Plus. So we have 3 services. I would expect to put them to put them into one bundle, sell them separately, but then also bundle them for the discount. So, I don't think there's better programmers in the TV business than HBO. So they will have best-in-class television programming.
So why is this maybe the media deal that works, Laura? You know the history, and I think about, go back to AOL, Time Warner, I think Cap Cities, Disney. They don't have a great history or track record.
Who? Media companies?
Media mergers.
Right. You're totally right about that. Look, P-Sky was going to go
I love media companies. I love working for media companies. I hope they stick around forever.
So I was just going to say, like, P-Sky was subscale. It was going to go under trying to compete with these big, deep-pocketed guys. Now it's going to try to do it with Warner. It may still go under and take Warner with it. But I sort of think they couldn't have worked without Warner. So now they're big enough, with enough scale, with a huge, really high quality library to do a better job of streaming, to do a better job of films. But really high debt, which really gives them, sort of a straitjacket in terms of their decision making, because the debt must be paid first. But if they can get they can get the debt down even if they don't reaccomplish investment grade, if they can just make enough free cash flow to, and all they need is a couple of hits to get that debt down faster, which will make the equity rise. So, and I do think their vision for the future of Hollywood is really innovative. So we just have to, once we get the regulatory approvals, the risks go down to execution risks. And right now we have both regulatory risks and execution risks, one on top of the other.
Hey, got about 30 seconds left. Remiss not to mention Netflix real quickly. They now have $208 billion to throw in their pocket because of the breakup fee. Are they in good shape, or do they need to do, I know we always talk about them with content as well, just real quickly.
Yeah, great. The Netflix is doing great. They can go back to their knitting. They're doing interesting things, little steps for little feet. They do not believe in the box office. I think that's like a crime, but they're just going to go back to being a global television distributor in your home. Fine.